Hello and welcome to the Wendell Effect for the Indian markets for the week of the 2nd of July, 2023. This is Brandon Wendell with you. Just quickly reminding you that we are not broker-dealers or investment advisors. We're going to look at this information from an educational standpoint only. I'm not telling you to buy, sell, or hold any particular securities, giving any personalized recommendations. All markets do involve risk of loss. This is always the situation. No matter whether we are trying to minimize risk, we can never eliminate it. And past performance is no indication of future results. The market always has risk. Do not trade with money you cannot afford to lose. And we're also not subject to trading restrictions, so we get a position in a security or initiate one at any time. You can go ahead and stay in touch with me, please. You can email me, brandonwendell.cmt@gmail.com. You can also find me on Twitter regularly at TraderBW. You can message me there, follow me as I tweet about the markets on a regular basis. And you can also search for the Wendell Effect on YouTube. As you can see there, please hit the like and subscribe button. I'd really appreciate that. You can also go for the alerts to let you know we have new videos coming out on a regular basis. So we're going to go ahead and take a look at the Nifty for the past month. And you can see that it's been pretty bullish with a few exceptions. On the bank side, you had ICICI, Kotak, and State Bank of India on the red. But other than that, pretty strong market by the looks of it. It looks like it may continue. Wipro is also showing some weakness. And then last week, that all went away. We pretty much had green across the board again with a couple of exceptions, but nothing really huge that's going to affect the markets. So we'll see if that trend is going to continue. On the weekly side, we had a breakout last week above prior highs, and that usually leads to a pullback. As you can see, we tried it once before, pulled back. I would not be surprised to see a little correction to retest the highs before we continue to go higher. But the markets are extremely bullish and showing a lot of strength. Looking at the daily chart, we actually did extend up after this little projection to hit a target at, well, originally it was this impulse, correction, impulse, and we might get a bit of a pullback here. This is what we call an exhaustion gap. You've got 1, 2, and this is the third gap up. Typically 3, 4, or 5, that's the number of gaps. If you're the third, fourth, or fifth, it could be an exhaustion gap at any one of those, which typically is novices are chasing price, and it exhausts the move, so you get a pullback, filling some of the gaps before you go higher. So that's a high probability this week that we should get a bit of a pullback, but we could still finish the week higher. So towards the end of the week, Thursday, even Wednesday perhaps, could see some movement to the upside. Looking at the 4-hour chart, really doesn't show anything different. Lots of bullish activity as we broke out. Maybe that pullback takes us just to this 19,000. It's not quite a demand zone yet, so I didn't mark it, but that is where we paused before we rallied, so we'll see what happens there. This week, I'm going to do something a little bit different than what I've been doing before. I was looking at some of the large securities on the Nifty. Instead, I'm going to look at sectors and give you kind of a view. You'll have to let me know. Again, give me feedback, what you like, what you didn't like, if you like this new format as to what I'm doing here. So I also have included the Sensex and numbers there as well. So you can see on the weekly chart, pretty much the same. We broke out of prior highs, couldn't really hold it last week, and then, 2 weeks ago, and then last week we finally rallied again. But usually with a large candle like that, after a move up in price, you'll get a pullback before you accelerate. So I expect this week to be slightly bearish as we pull back just a little before we can go higher once again. So dropping down into the daily time frame here, again, you see that exhaustion gap just like we did on the Nifty, overshot targets, honestly. And since we overshot the targets, we did do it with great momentum, but we should get some sort of a pullback before we continue to go higher. I don't really have a good pullback target here. Let's check the 4-hour. We actually do have a slight demand zone possibly forming at 63,828, 64,050. So look for a pullback to that point. It's also a fib pullback between 38.2% and 50% for before we bounce again. So watch for that pullback. If we do pull back and stay above 50 on the RSI at that pullback point on the 4-hour chart, that may be where we start bouncing on the Sensex and also the Nifty as well. If not, if we have a little bit of weakness, we could go as low as 63,000 right here for that next demand zone before we bounce. Now, as I said, I'm going to go into some of the sectors here. So we're going to start off with looking at Nifty IT. Nifty IT is looking a little bit weak. We do have an overhead supply, but it has been tested. We started off some of the selling pressure here. It's also a target just above. We have enough momentum to get through, but we should stall first in this area. So this is a daily chart, and I expect that we'll have a little bit more push to the upside, but stalling right around 30,000 and maybe even a bit of a pullback, we could retreat as far down as this 28.5 area where we had this initial move to the upside recently. So watch out for that, but definitely not the strongest of sectors for this upcoming week. Nifty Auto, looking at the daily chart, we actually did pause at our first target, and we had a bunch of different Fibonacci extension targets. There was impulse, correction, and we duplicated the impulse, just did a 100% duplication. Well, then we have this impulse, correction, duplication. Well, now we're starting on a new one, impulse, correction, and if we get the duplication, that would give us a target of 15,783. Now, if we're losing momentum, which it actually looks like we are, notice how we're getting a lot less momentum on the RSI, we may top out around 15,303 instead. And that gives us a 61.8% extension rather than 100%. So I'm seeing that there's a little bit of weakness coming in the auto sector. Again, we had that big breakout candle, might pull back first this week before we even go to the 15,303. I'm expecting initial pullback, then rally, then pullback again. Moving on to Nifty PSU banks. Oops, there we go, public service. Anyway, you can see this is a very weak sector, just moving a bit sideways, and we're caught. We may get a breakout, but if we do, we're just likely to retest this supply, maybe go above this high, but stay below 42.80. So I'm looking at maybe 42.70, 42.65 before we turn back down if we get that break to the upside. If not, we could just see what we did last week, where you just pulled down, hit the bottom of the channel right around 4,000. And that's very likely. You can see that we don't have enough momentum to get above 60 or even below 40. That means we're just moving along sideways in the trend. Nifty CPSE, looking at that sector, you can see that we also are trying to make a new high. We're doing it with a lot less momentum. That is also warning of a pullback. We've also almost made it to our fib projection here from the previous big impulse correction, and we're stalling out. Okay, so with that negative divergence, we may pull back first and close the gap at 3,200 before we reach up to 3,300, which is my next upside target for the end of the week. So look for the pullback first, partial, maybe even a full gap close, and then a bounce. Moving to Nifty Digital daily chart, this already did do its pullback. You can see we retraced, stayed very, very strong, and here we are trying to break out again. Problem is, when we made the new high, we did not do it with more momentum. We had less. So with less momentum, that's a divergence, and we'll probably get another pullback, maybe into, I don't know, 58.50 or so. We probably want to look at intraday. So here I am on the live chart, and if I'm looking again for another pullback, because we did the first one here, what I could do is enlarge this, number one, but also go down to a 4-hour time frame. We don't need the projection, we need the retracement here. There we go. And that's our current high. We go down to the 240, and we might get a better clue as to where our pullback should be taking us. So let's take a look there. Zoom in. There we are. And, well, we don't really have any great demand, so it could be just a pullback to one of these zones, probably 58.70 or 58.50 before we bounce again. So keep an eye out for that on the Nifty Digital. Continuing along, we got the private bank Nifty doing pretty much the same picture, breaking out, but now we actually have more momentum than we had before. So this sector looks a lot stronger, should be chugging along to the upside, but it may need the broad markets to help it carry upwards. So we could see some slow movement to the upside, but my next upside target is 23,824, which is the fib projection. Looking at Nifty PSE, we had also a big pullback, and we're trying to break out again, but the same problem. As we come up to these previous highs, we're having a lot less momentum than we've had before. We need more momentum to continue to go higher, so look for a possible pullback. Once again, if I go back to Nifty PSE, we can take a look at the 4-hour time frame like I did before, possibly use a projection there. If I clean this up, there we go, and get an idea of where our pullback may be taking us. So from the low to the high, and we look at a retracement. Now we have some possible targets of 50.31, 50.14 for the bounce, maybe even 5,000 even if it gets pretty bad. But that's what I'm seeing there on CNX or Nifty PSE. So we'll see that possible pullback before we move up to the 5150 area for supply, or a projection really. Nifty Financial Services daily chart has also reached a target. We do have a lot more momentum, and even the candles are very bullish. So if we get a pullback, it's going to be very small. I'm expecting this to continue to go higher, at least to the 20,219, if not even above that. If you look at the projections, you could actually use these projections. Let's go again to the live chart. There it is, Nifty Financial Services, and going into the daily time frame that I had, let me go and adjust and give you some additional targets, 20,672 and maybe even 21,176 to the upside. So look for continued movement upwards. This is a very strong sector as a whole. Nifty Pharma, also very strong. Look at this breakout to the upside. We have very good momentum. That's what you want to see for a continuation of a trend. When you get a breakout to new highs, but you don't have a lot of momentum, you get the pullbacks. Here we have a very strong move to the upside, but also strong momentum. So any pullback would be very small. I would not be surprised to see a pullback. If we do, the most would be maybe this 13,628, retesting it before we project up to 13,969. That's my target for this week. So pharma looks like a good, strong sector to be in for the week. Looking at the small cap, Nifty small cap, we have a demand zone. If we do get a pullback, notice the divergence. Prices went much, much higher, but without momentum, we're likely to get a pullback. And if we do, and we're still above 40 of the RSI, when we pull back to this 47.96, 47.42, that's a good buy point and a good bouncing point. And if we bounce there, we're likely to move up to our supply at 49.24, or even up to the 5,000 level. What we might do is actually get a little push into the supply first, bounce down, hit the demand, then bounce upwards. So that's why I'm kind of expecting that last little move up before the pullback and then continue to new highs. Looking at mid caps, a little bit bigger, same problem. You can see that we're at new highs without the momentum, so we're likely to get a pullback, and the good buy point would be around this 98.83 to 97.62 for a bounce to take that sector, or really that index, the mid cap 50, to the upside. Our initial target, that 251, then 384. And looking at healthcare, we have a broken out of a prior supply, and the reason why we did that is we have more momentum. That's that dotted line there. That was a supply that had been tested, so we obviously broke through it now with the momentum that we needed. But here we are at another supply, so we'll probably get a little pause between this 89.23 to 9,004, a little bit of a pullback or sideways movement expected this week before we continue to go higher to those Fibonacci extensions. I don't think we'll get that week that we pull back to 86.15, but if the market does pull back as a whole, healthcare could pull back a little bit down to that level. That'd be a great buying spot to target either 90.47 or even 91.92. And moving on to Nifty Infrastructure, you can see we stalled out at our first Fibonacci extension. We had this impulse, actually back here, impulse correction impulse, stalled out at both of these targets. So it's trying to work its way up to the next one at 58.64. Problem is, again, we lost momentum. So when you lose momentum like that, you usually get a pullback. We've already tested this level as demand at this 5,600 level. We could retest it once again and bounce from that. Or if the momentum is really weak, we could actually go down to this level, which is somewhere in about 54.80. So keep an eye out for that. Overall, this is still very bullish, but it's going to pull back first with the lack of momentum that we have. Speaking of pullbacks and weakness, we have the Nifty oil and gas. Very, very weak sector. Oil and gas has not been doing really oil has not been doing very strong. It's seasonally kind of bearish this time of year anyway. And you can see that we're just drifting sideways back and forth here in somewhat of a channel between that 7,600 down to 7,300 is that channel. We're not quite at the top of the channel. We also have a lot less momentum here. So we'll see if we're able to get to that top before turning down, or if we fall quicker because we do have less momentum. It basically comes down to the last candle. So let me go ahead and take a look at that. Nifty oil and gas, there we are, and kind of zoom in and focus on that last candle. So basically, get rid of this for now. What we're looking at, if we do Actually, I didn't want to get rid of that. Hang on. There we are. And we look at that last candle. As I said, if you break the high of the candle, 75.45, expect us to reach the top of the channel. Actually, we can get rid of this, because the target would be somewhere around here. So if we break 75.45, expect us to go up to 76.36, then turn around, because we don't really have enough momentum to break out of the channel. If we don't, if we break the low of 7,500, expect prices to go down to 73, 72 by the end of the week. So that's what I'm seeing. Whichever one we break, either high or low, we're likely to continue to those targets on either side. And looking at Nifty FMCG, we have a pullback that has already occurred based on this divergence. You can see we have a lot of weakness in this momentum. We should be making some new highs, both in price and momentum on the RSI. And because we are pulling back, this is showing a little bit of weakness. We actually have overlap where we had a previous Fibonacci target and a new one at 52,352 that could cause some weakness. If we start off strong on Monday, it could pull back very easily to probably right in this level, about 51,500, before we get another bounce. The best target above that is right here, where you have that overlap again around 54,300, but really 54,350. And that won't happen this week. But we may get a bit of a pullback. Again, we could probably go to a 4-hour time frame. FMCG. Oops. And I'm going to go ahead and get that up. There we go. And the reason why I wanted to bring up the 4 hours, I just wanted to look a little more in detail here. If we do pull back, where might we see a bouncing point? We actually do have a little bit of buying pressure that originates at 51,701, 51,477, and below right here at 58.01. So if we do pull back, look for that as the bouncing area to take us up to that target of 54,390 eventually. So I wouldn't be surprised to see us hit this area of 52,400, pull back, bounce, and then go higher. So that's what I'm looking for. And Nifty Energy also showing a lot of weakness. We had a divergence, pulled back, but held demand. Notice again, we have very weak momentum as we're trying to break out to the prior highs or of the prior highs. I think we're going to fail, and possibly if we pull back, we could go much lower to about the 23,387 level right about here. So we did do a pretty deep retracement of the impulse down, taking a long time. This is not a bullish trend. This is simply a correction of the previous impulse, and we should resume that impulse soon. And with divergence like this, here we had another divergence, but we made a peak above 60 after it. Here we have another divergence just like we did before, and now we're trying to make a peak just at 60. That may be the death knell for this sector that sends us down and starts a new impulse. So keep an eye out for that. If we break the low of Friday's candle, then yes, we could have a lot more bearish pressure to take us down to new lows eventually. Moving on to Nifty MNC, this also is retesting a prior high, but you can see the momentum has died off. So once again, we got a divergence possible. It hasn't put in a high yet, so we're not done. We could break this high, and then we could pick up in momentum if we do. If we do pick up in momentum as we break the high, then expect us to finish out the week around 22,343. But if we can't get above the prior highs here on the RSI as we break the prior high in price, expect another pullback to retest 21,309 this week. And Nifty Realty, let's see where we are here. On Nifty Realty, we have, oops, bear with me. Again, same thing, just kind of a pullback. And once again, we need to break out of the highs with momentum. Otherwise, we're likely to fail back down. We actually have a bearish candle here at the end that could take us back to the 506 area or even down to this 480, which is the next demand level. We do have a lot of weakness coming in that could push us a bit lower. Looking at consumer durables, that one has been a strong sector, but again, we started seeing some weakness. Notice we made a much higher high in price, not in the RSI, and the follow-through is still above 60. So if we do pull back, we're only going to pull back to about 26.4 right here, 26,400 before we bounce. That's what I'm seeing this week, is that we might just get a slow pullback, maybe accelerates towards the end of the week, but our bottom should be around this 26.4. So this looks like it could be somewhat of a bearish week for consumer durables. Looking at Nifty Media, we already bounced off an area supply, and this isn't a bearish trend. And it looks like, well, we got tested demand down below. We could go all the way to 1608. Probably not this week, but we will see more red days than green days for the week. I wouldn't be surprised to finish up around 1700 or maybe 1650 by the end of the week. Looking at Nifty Metal, once again, we're trying to break upwards, and we do have supply overhead that will give us a overhead target plus the projections inside of the supply, but the momentum isn't there. If the momentum was stronger, I'd be all over this going to the upside. The problem is we're diverging again, and therefore we may get stuck and kind of rolling over a bit sideways before we can go higher. And finally, the Nifty Bank sector. This is one I usually follow as well. You can see we've broken out the new highs. We actually do have a bit more momentum, so this is more legitimate of a breakout. My target, if we do continue to see bullishness, which we should this week, is this 45,200 area. We got overlap from two different projections there, as well as the next level, 46,200. Right in there, there's another overlap of Fibonacci. So expect this to continue up, probably stall out at 45,200 this week for a little bit of a pause, and then maybe next week we get that extra move upwards. So let's do some follow-up on some of the trade ideas I put out in our last video. It's been a little bit. But looking at HDFC on the daily chart, we had a demand zone that we were pulling back into, looking to go long on this. And this was back in mid-June, I believe. And the follow-through, let's see. We have that? There it is. There's the follow-through. It worked out really, really well. And we're almost at target number 1. So hopefully you're able to take advantage of that. It did stall out for quite a long time, but it is paying off. So being patient. Make sure you've got your stop loss moved. There is a demand zone here at 2720. If we do pull back, we're probably not going to go below that before bouncing up to the next target. Looking at Maruti Suzuki, we missed out on that one. That went running upwards instead of pulling back, so that's no longer a good trade. We're going to skip that. Same thing with Nestle India. You can see it was bullish. I was right, but it never came into our demand first to let us in, so we skip that. Rec Limited, same thing. It pulled back close, but never quite got to our demand zone. If I'd used the wicks, maybe it got there, but oh well. NCC Limited unfortunately stopped out, but it didn't quite hit on demand here. And when it came into this demand, we were below 40, which is a no-no. I don't buy when we're below 40 because demand will not stand. It eventually used this lower area as a bouncing point. It went up, so that one's done as well. NHPC, this one did hit our entry going back into late May, so we've been holding on to this for a while, and it's still not rallying very well. You can see we're flattening out, so we need to take profits if you already have them here. The fact that we're going a bit sideways and losing momentum, we're likely to go back down from here, so keep an eye out on that. Maybe if you wanted to stay in, keep your stop underneath this candle. What is that, about 44.60 perhaps? So keep your eye on that one. And ElectCast, that looks like it already hit targets without pulling back, so that's a no trade anymore. Bharat Electronics, same thing. We ended up hitting our targets without pulling back, so no more trade there, unfortunately. And we can start looking at some new opportunities going forward now. So here we go, taking a look at a few trade ideas. Rama Steel may have an opportunity at this demand of 34.05, 35.25. We have the 89 moving average inside. That's an exponential moving average. And typically when we hit that 89 while it's in a zone, we get a really good bounce from there. So target 1 is 43.10, target 2, 47.95. I'm going to put that stop loss below the zone. So I've got to set it about 33.75. You can adjust it based on your risk. Zomato Limited also has a couple of demand zones. We didn't quite test the 72.35, 69.60, but we came close to it. So we may just pull back and bounce off that. There's another zone below that as well. I would like to see it hit the moving average at the same time. I don't know if that will happen though. But if we can get a good bounce off demand, remember we need to be above 40 on the RSI to be able to go long, targeting 84.90 and then 92.55. Also, credit access. Looking at the daily chart here, we have a really good drop-based rally demand zone at 1168.70 to 1200.45. Looking to target these new highs at 1476 and 1560. Once again, I'd love it to be able to meet up with the moving average inside of the zone. So if it does, great. If it doesn't, so be it. Typically, I want to bounce off that moving average while we're in the zone for the best strength. keep an eye out for the RSI. If the RSI is below 40 when you're at demand, do not enter. Okay, we want to actually see that we're above 40 so we don't have too much bearish momentum that might hold us down. And time tech, I think this is my last one, if I'm not mistaken, I'll check. But with time tech, basically what we're seeing here is possible pullback to an area of demand, 102.15, 107, again, hitting the moving average at the same time. To support that, we are getting a divergence, which should pull us back. Hopefully we can get a nice entry and a bounce before the earnings come out in August, but we'll just keep an eye on this one. The entry should happen before earnings because we're likely to see that pullback first with the divergence we currently have. It's just a matter of whether we'll have to protect ourselves and maybe exit before the earnings. So those are the trade ideas if you have. If you have any questions, email me at Brandon Wendell, .cmt@gmail.com. Find me on Twitter at TraderBDub, and please, if you could, hit the like button and subscribe, and maybe even get notifications on as well. That way you'll be in the loop when we put out the new videos. So until next time, everyone, trade safe, trade well. Thank you for being here. My name is Brandon Wendell, and this is The Wendell Effect.